Hello and welcome to another episode of FinTech Focus TV, powered by Harrington Starr, global leaders in financial technology recruitment. Head over to harringtonstarr.com where you'll be able to see some of the greatest jobs in financial technology recruitment across the world. You'll also be able to find a host of insight to help you grow your brand, your team, your network and your career. You can see the latest financial technology salary survey. You'll be able to download the issue of the Financial Technologist, focusing on the appetite for disruption. And our latest Top 1% Workplace Awards will be out at the end of this year. If you work for a company that's a great place to work in financial technology, we want to hear from you. Enjoy the show, and I'll see you soon. Hello and welcome to our episode of FinTech Focus TV with me, Toby. Today we are here in New York live for FinTech Connect North America. And I'm absolutely delighted to be here with Steve Pearlman. How are you?
I'm great, Toby. How are you today?
Absolutely brilliant, thanks. And look, listen, thanks for coming on and joining us. You're on a panel later on, which we'll be talking about in a bit. How's the day been so far for you over here?
Day's been great. No travel plans, lots of good networking opportunities. Life is good.
What's not to love? What's not to love? So, Varo Bank, we've just been talking about a little bit beforehand. Seems like you guys are doing some fantastic things. We're going to dive into all that in a minute as well. But before we do that, tell us a little bit about yourself.
So for me, I'm the head of compliance at Varo Bank. My journey to Varo really starts with an ongoing love of the internet. So, I'm old enough to remember life before the internet. So I remember the very first purchase I ever made was an eBay purchase. My father had given me a liquor bottle that was commemorative of the 1960s election, and he gave me, as is befitting it, the Republican liquor bottle. I, as a kid, always wanted the Democrat one, so I had been looking and looking and looking for it. I went on eBay, and in 30 seconds, I found one. A very nice woman from Oklahoma sent it to me for $6.95, including shipping, and a love was born. So I kept that throughout my career. So I ended up, I started as a lawyer, but I ended up going to Capital One during the dot-com era. And we were doing a lot of FinTech startup work at that point before people even called it FinTech. And then I spent time, at Freddie Mac and at E-Trade, which was more like an aging FinTech, but had been one of the first online brokerage. And that travels took me to Revolut and out of Varo, where I run compliance for them as we try to build out a digital bank.
It's a hell of a story, right?
Yeah, it's been a great ride.
And talk to me about Varo. So you're there at the moment, and tell us a little bit where you fit into what is quite a busy ecosystem, right? There's a lot of places there disrupting the banking industry. We've heard about it already on some of the keynotes today. It's a hot subject. How do you guys stand out?
Well, we really stand out because we're trying to disrupt the banking industry from the inside. We're the first all-digital, native digital bank chartered by the OCC with a bank license. So we have a full U.S. bank license to offer customers. We're really focused as a customer base on folks that are underbanked or in some ways overbanked because they have too many accounts. And so we've worked to design a product set that fits for them. And if you think about our customer base, they're sort of the majority of the folks in the U.S. that live paycheck to paycheck, right? They're friends, family members that are short of cash sometimes, right? They might not have enough to meet their bills. Inflation has hurt them, low wages. They might have a medical emergency or some unexpected expense. So Varo's there to try to have a set of products to help them build wealth over time. And we're doing that within a banking charter, which also gives them a safety factor around their money that we think is a real competitive advantage and good for us, but also good for our customer base.
And is this what drew you to the business yourself as well, to look at that? And I think that underbanked world is a really fascinating space. And the bank, the whole, this concept of banking for good is something there where we can see an industry and actually do a hell of a lot more with it and make it a better place for to do it. That must be something which is...
Yeah, the mission of Varo very much drew me. I've always been and done some nonprofit work to try to help folks build wealth. So if you think, when I think about it, the first level of the social safety net is just, do you have a place to live and enough to eat? That's a very important level. But then the next level is, do you have enough money to handle day-to-day expenses, to handle the little things that might come up? Your water heater breaks, your car breaks down. Yeah. And so many folks don't have that level of safety and that level of security that comes with having a little bit of savings. And so the mission of Varo to try to help people make that next jump from paycheck to paycheck to a point that they feel a little bit more secure around their finances and can handle what life throws them is a big energizer for me, and very much what Varo's about as an institution.
Well, we see that a lot at the moment, don't we? We're seeing a lot of people under enormous pressure with cost of living increases. We're seeing a lot of volatility out in the marketplace, full stop. And there's a lot of worry and a lot of concern. And I think the businesses, as you say, who've got a mission about that to improve that scenario, I think it's a really compelling piece to be putting out to the marketplace at the moment.
Yeah, no, absolutely. And I mean, we also think in the chaos that we've seen over the last year, whether it's, some of the insolvencies at the crypto firms or with some of the fintechs, there's also a safety of doing your banking with a regulated bank. And so for us, we're tightly overseen by the OCC, which is making sure that we stay sound, that we stay in business, but also customers' deposits are FDIC insured through the entire life cycle. When you start looking at, some of the payment companies, some of the fintech companies that get into the U.S. market through a partnership with banks, there are situations where the money's insured. There are situations where the money's not insured. So for a customer, you're penny and you're trying to make it day to day, you're really busy, you got a lot of things going on, really hard to figure out if your money's safe. You come to a bank like Varo, you know your money's safe, but you don't have to give up the innovation that has come the digital era, right? We are a natively digital bank. There's a great online experience through the apps or through the websites, and the products are really designed for what the customer wants, but designed to be delivered digitally.
I think that's so important, isn't it? Because that to me is where there's such a big opportunity at the moment, with people who look at the marketplace and think, right, there's the traditional banks, and you just still get that potentially undervalued experience. For this, digitally native businesses that are coming through and rethinking that customer experience, it's so important to be able to do it, particularly when you're talking about things as important as I think the underbanked sector and everything we're talking there with security and helping people to think forward and think responsibly commercially. You mentioned as well that your background's compliance, you come from a legal background before that. We're at a time of, I guess, unprecedented regulation everywhere. Tell us, from a US perspective, where I think we've probably seen, there's so many different states with so many different regulations. We see so many more things coming through, particularly with the advancements in digital assets alongside that as well. Tell us what people should be looking out for in the regulatory states in the US at the moment.
Yeah, so if you think about regulation in the U.S., and I know it'll feel very different to the Europeans out there or to folks from Asia or otherwise, it's a very decentralized environment. So the first thing folks have to understand is there are many different sources of power, and each of that source of power is important. So, you may have federal regulators that you're dealing with the banking regulators or with the securities regulators, but the state regulators are also really important. The other piece, though, that's evolved in the U.S. that, in my opinion, is a little unfortunate compared to much of the rest of the world, is the U.S. regulators have taken an approach of slow in terms of opining on new technology. And so they've let other places, the UK, Singapore, you would see they've more directly taken on whether it's Bitcoin or AI and spoken directly around their expectations around it. That hasn't happened in the US. And I think what that means for a business environment is you have to get used to a level of uncertainty. And it can play out different ways. There are places historically where the rules have come around to match what's already evolved in the marketplace. So I'm old enough to remember when online contracts were brand new, it took the lawyers 5 or 6 years to get comfortable with a click agreement on a contract, long after it was widely used in the marketplace. So that's a place where the rules came around and met the marketplace. But we also can be aware of a number of situations where the rules don't bend, they ultimately force the market to bend with them.
Yeah.
So most of your listeners are going to be familiar with what's going on in crypto in the U.S. Clearly at this point now, everyone is having to bend their business model around whatever you can figure out being the U.S. rules.
And this is a really interesting thing for me because, we've been speaking about whether the US is starving out crypto innovation in digital assets. And as you say, that there are other countries, the UK government has just literally got behind it to try and make it a global centre for DeFi and really pushing it further forward. And I wonder actually, when you look at the US as to whether it's an amazing juxtaposition for me, because there's some real powerhouses of financial technology, that FinTech that have come out from the US. But then at other stages, it's almost like it's been suppressed in other times as well. Even the way that people pay over here at certain stages as well, I think is really interesting. So I think, hoping you agree with me, but there's a real need for the US government, I think, and every part of regulation to continue to be competitive and make it, because there's so much going for FinTech in the US for the stock as well, right?
I certainly think clearer rules would make it easier for businesses trying to operate in the U.S.
Yeah.
I think the reality is we're going to live in a world of uncertainty.
Yeah.
And if you are operating in the U.S. or trying to operate in the U.S., one of the things that's going to help you win is to figure out how to best navigate that uncertainty.
Yeah.
And it plays out differently who you are. So if you're an incumbent with a great franchise value, you're going to be slow because your lawyers and compliance people are going to say, we don't know, we're scared. You're going to be slow into space. So you're going to be slow off the starting gate. If you're a challenger, you're going to be faster out of the starting gate because you don't have the same franchise to protect. Right. But if you're a startup, you also have to realize that the rules that apply to you when you're small, so you're Series B, no one's really paying attention to you, you'll ultimately, as you get bigger and try to scale, have to figure out how to deal with the rules. So both paths are different, but driving a strategy to deal with the uncertainty becomes the key for success in the U.S. And it would be great if the regulators gave more guidance in some of these areas, but I think the reality is, and businesses have to deal with the uncertainty day to day, and I don't see any indication that that's going away in the near future.
Yeah. It's get comfortable being uncomfortable. I think it's the message from that, right?
Exactly. And we can hope for something different, but we have to deal with the cards that are dealt us.
Absolutely.
And in the U.S., that's uncertainty.
Yeah, absolutely. Let's finish coming back to FinTech Connect today. So tell us what drew you guys to this event.
Well, for me, first of all, it's great to be part of an event that's both U.S. focused, but also is thinking more broadly, because a lot of the really important innovation is happening in the U.S., but a lot of the innovation is happening outside the U.S. So the event gives a chance to have cross-pollination between that and to meet and understand what folks are working on across really the entire world and across a number of financial sort of verticals in a way that's really great and not served by a bunch of other conferences that tend to be more focused in their space.
Yeah, I think it's always been a great event those guys have run. The same in the one in Europe is I think there's a lot of interesting tracks, a lot of interesting conversations. So please you see that as well. Let's and you're speaking later on. You've got a panel which you're sat on. Give us a sneak preview about some of the things that you were talking about in that, for what we can expect to be hearing from you.
Got it. So we're talking about regtech and automation in the regulatory space. So we're thinking about how companies are starting to use automation, both in terms of interacting with the regulators, but also in terms of serving customers. And for me, my insight there is what we already talked about a little bit, which in the U.S., things are slow, so you're going to deal with uncertainty, and you're going to deal with skepticism. So you're going to find regulators who aren't going to be convinced just because something seems new and shiny or more efficient. They're going to want to see it. So as these new technologies roll out, companies are going to have to work with strategies to bring their regulators along. So they may at times need to run the technology in parallel with a human process. There's a recent example around AI where an AI credit model, and the way a credit model works, it doesn't have clear reasons for its answer. It's more complicated than that. The U.S. regulators have been very clear, though, the rules that require you to give a reason for denying someone a loan stay, and you have to deal with those rules. So people are now building models to explain what the other model is doing to satisfy the regulatory requirement. I think those kind of compromises are part of where we're headed with the regulators. And I think the other big places AI really comes on the scene is there will be a big discussion about when AI can replace a human. So I think we see lots of places where...
This, isn't it?
Yeah, absolutely.
Yeah.
We're going to see lots of places where there's skepticism. In fact, there's a recent settlement with Bank of America where they had, it wasn't even an AI-driven model, but where they had an algorithmic-driven model making some decisions around credit card disputes, and they ended up getting fined $235 million because of those decisions.
Wow.
We all know that humans make mistakes too, but we'll see. Everyone will have to get comfortable with that. And so when I think about AI coming out, whether it's in the call center or otherwise, in a regulated space, I think people need to understand that there's huge lift in using AI to help inform that decision, but actually making the decision is a jump that's probably several years still off, at least in the U.S., in the highly regulated space.
Well, no, I'm going to be poking my head around the door and watching that one. I look forward to the conversation. And Steve, thanks so much for joining us today and telling us a little bit more about you and the bank. For those who want to follow up and find out a little bit more, I can assume they can find you on LinkedIn.
They can. Steve Pearlman.
Fantastic. Steve, it's been an absolute pleasure. Thanks for joining us
Toby.
today. And good luck later on. I look forward to hearing more about it.
Excellent.
Excellent. Thank you all for watching. We'll see you on the next episode of FinTech Focus TV. Bye for now.